This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Welcome back to the channel. I want to show you a couple of trades today that one is the breakout trade and the other is the pullback trade. But I've got actual specific examples. One of the reasons why I love doing intraday trading periodically, just mixing it in, I'm not an intraday trader, just to let you know. I mean, I used to do it for hours and hours all day long. That's all I did. Now I just kind of mix it in because I think there's so much we can learn from it. And I can give you the specifics of what I'm seeing, how I execute everything, and it all happens in one quick video. So let me go ahead and give you this example. I'm sticking with the spider again, and I'm sticking with the 10-minute and the 2-minute. So last week, I was talking about this drop in the these two setups to the downside, and then I talked about how this could be a climax on the 10-minute. Remember this, where we had this divergence where we couldn't get above 25, and then we got a spike to the downside on this gap down. And I said that, you know, if we got some signs of improvement on this 10-minute, you could argue that we could be in process of making having a climax on this time frame. Now, it doesn't necessarily mean we're going to reverse the whole trend for the entire market on the bigger time frames, but for this time frame, there could be some plays to the upside. So I've been watching and just looking and seeing what's taking place. And one of the things that caught my eye today was this move where we gapped down and then immediately turned up. And when we turned up, the MACD crossed back above the 0 line. And then when we pulled back, it started to use it as support through this consolidation pattern. So instead of getting up into that area and looking like resistance, it looked to me like it was forming a shelf, almost like a spike and ledge, right? You could look at this as a spike and then forming a ledge. So I was sort of thinking coming up through this 386 level would be pretty important. So I started to keep an eye on the 2-minute chart and notice what happened here. The trend line was more of a slightly downward slope to it, but look at what was going on in the ADX. Look at how quiet this is. And especially from, it was a little over an hour where all three lines stayed below. Okay. When you see that, I'm telling you, I used to do this just purely on the weekly chart, looking for stocks where they have this low ADX pattern where all three lines stay below 25 for an extended period. And in this case, it happened on a 2-minute chart. And I also noticed that right before this was breaking out, you notice how green DI popped up and held 25. So I was pretty ready as this was starting to move up, and I executed this right at the 386 level. So now looking at this and recognizing the resistance that we had and knowing that I'm fighting the trend a little bit, right? I mean, I've got a declining 18 hour here. I wasn't going to play this for any kind of a monster move. And this is what I said last week, that I don't play for big moves. I'm looking more for shorter term trading plays to add, you know, being a bean counter with swing trading and this type of intraday trading, just add crumbs to the bottom line and see what you can add. And so I got in this 386, and literally on that 2-minute bar, by the end of the bar, it was at 386 and a half. And then the following bar, it pushed all the way up and started getting up into these spike tops. So I took my first, I executed my first profit there. And then I got a red bar starting to form. And again, we reached all the way up into the highs. And I was sort of thinking this was a really good trade for such a quick move, to have this move a point like that in a short period of time. So I took another piece off at that level. And then within a couple minutes, it exploded again, and I had one last part of what I owned left, and I decided to go ahead and exit that. Now, I want to clarify something, because in reality, there was no reason here to sell, we were still making new highs in the DI line. So let me actually make this orderly. So if you notice, we made a new high here. So I really should, after taking profits, I really should have waited for this to make another new high and then look to take profits here. Do you see how we have divergence on this peak now? This peak has divergence and then go bar by bar and get stopped out. Well, what I did was, instead of staying in, I took it and then I went down one more time frame, and I have a 15-minute chart, and I got an opposing trend trigger here. And I knew that I shouldn't have been out of it, so I did it early. In most cases, so let me just show you this. I bought this as this was closing back above both moving averages, but there was overrun here, a little bit of sellers. There was no real selling strength. So I was okay with doing that, but I kind of knew I had some risk in the short term. I figured this was going to pull back a little bit. I was going to use a stop here because the reality was I should have stayed in based on what the 2-minute was doing. There was still good strength. Now, as this moved up, I noticed the ADX really wasn't doing a whole lot. So I started to take some profits here. But the other thing that I was doing is watching the 2-minute, and I'm raising my stop. On the last piece, I started raising stop, raising stop, raising stop, and then I got stopped out here because this was diverging, and I got stopped out here. Now, with 4 or 5 minutes later, I was thinking I was wrong because this was starting to look like it was going to break out again. But look at what ended up happening. Ended up being a pretty solid exit based on my strategy, which is if there's divergence in DI, I raise my stop. And in the moment this went to a new high, stop goes here. Next bar goes here. Next bar here. And then I got stopped out. So that's how I usually will do it if I'm trailing a stop tightly after taking profits. So I had my initial trade, nice move to the upside. I took profits at the prior top and made sure that I didn't get in and give it all back in a market environment that really hasn't been very good. And I knew I had resistance on the higher time frames. And then we get explosion move to the upside. While there was confirmation, that was a pretty big bar. That was the biggest bar of the move. So I was a little antsy after that. You got to understand me. I used to see this and think, oh my God, it's going through the roof. And now I know that that's an opportunity to be a seller. You always want to take advantage of monster bars. That's the way I do it now. When I see a monster bar, I'm really antsy to want to be a seller rather than hold on for dear life because I think this is going to go up forever. When I see a big bar like that. So I exit and then I bought the pullback. It didn't come all the way to the 18, but I got a nice little pinch developed and opposing trend trigger on the 15-second chart. It's not ideal because it was a 2-minute, 15-second trade. I don't like using that combination, but TradingView doesn't have, so 10 minutes too short, 15 minutes probably, I don't know. Actually, 10-minute, yeah, I don't know. I don't really have a good combination for a 2-minute chart with a lower time frame. So I just took this, recognizing that I probably had to give it a little bit of room, and then it took off. So this is the way I would look at doing these kind of trades. So I've got my 2 trades, and I tell this to guys that I'm consult to or are teaching one-on-one. Have 2 trades. And, 2 trade, you could start off with just one. I have 2. I have my breakout trade and I have my pullback trade. All right. I have rules for those trades. I can't just think, oh, this looks like a breakout, let me buy. I mean, it's got to meet criteria that I'm looking for. This is one big criteria. I mean, this didn't hurt at all based on what the MACD was doing with the pinch and the follow through crossing back above the 0 line. But, have an approach that you're following, and I would say 90% of what you're doing, 85 to 90% is written down. And then you do have to have some subjectivity based on the bars and the price action and whether you decide to do it or not based on the overall market conditions and all that. But if a stock or a specific trade meets all of your criteria and you're not doing it, then you have to reevaluate why that is. Is there something in the approach that doesn't fit with your personality? because the approach that I use really fits with my personality. And I've looked at these, I've seen these opposing trend trades happen about a gazillion times. So I know what I'm looking for. This low ADX pattern was kind of aggressive off a 2-minute chart where it was low, but it was a low ADX on the 2-minute, but it was also a low ADX on the 10-minute. So I had 2 time frames and I was looking for a move. I thought it was quiet for a very long time, especially based on what had happened here. So hopefully you can get some things out of these, out of this thought process. The other thing I'll tell you is that I was definitely looking for an exit because it was getting late in the day. We've only got a little bit left in the trading day here. So think that way when you're putting these trades on. Know what kind of target area you're looking for. I actually had a limit order up at 388.75. If it were to run up there, I would have been taken out of the trade, and then I was trailing a stop, and I ended up getting that taken out first. So have a strategy, work the plan. Don't plan your trade and then trade your plan. Don't just put on a trade and hope for the best, and then every new bar comes out and you're emotional about every single bar. Every bar comes up. Trust me, I've done it. I used to do it that way. And it was a losing game because every time there would be a bad bar, inner bar. I mean, let me tell you, this bar ended up green, but it was up and then it gave a lot of it back and then went all the way back up. I mean, if I'm sitting there just trading based on what I'm seeing and looking at every single bar, I probably would have been taken out of the trade at like a small profit, like a $5-10 profit, or really small, just because I didn't want to turn that into a loser. But I know now I have my plan in place and I'm going to follow my plan. And if your plan isn't working and it needs tweaking, then tweak your plan, do another 20 trades, and then see how they do. See if it needs more tweaking. If it does, do that. Do another 20 trades. Don't change your trading approach right in the middle of a trade. Follow the plan, trade the plan, and then see if that plan will work over, say, a 20 to 25 trading segment. All right, that's the video for today. Go ahead and post any questions or comments. Thanks.